What's up, guys? Mike here, head trader at True Trading Group. And on December 12th, finishing the day green, but started off red. And this is going to be a really good video. I need you guys to really stick around and watch this video to the end. I've got a ton of lessons I'm going to go over with you. A ton, honestly. I've got a bunch of mental lessons. I've got I've got 3 technical lessons. I've got like 2 different mental lessons. I mean, there's a ton of stuff that I'm going to cover with you on this video. So make sure to smash that like button, guys. Hit the notification button with your mouse. Make sure that you guys get notified every time I post up these videos and get ready to really learn something that's really exciting, because AMRX today and then SPY options were the 2 trades that I made today. But there was a mental hurdle that I had to overcome. And this is something that has never happened before in my 15 years of trading. This has never happened. It was a major mental hurdle that I had to overcome, that something very specific happened to me. And it's kind of funny because I'll keep kind of just reminding the channel and letting you guys know that the Trader Psychology course is now live. Okay, part 1 of the Trader Psychology course is live. So if you guys want to take advantage of the sale that we have going on right now, which is up until December 20th, we're doing 30% off an all-inclusive membership to get you access to all of the courses. For that, use coupon code TTG2020 on our website, truetradinggroup.com. All right. It includes 30% off the entire website curriculum, a 1-year access to the chat and all the trade alerts, and everything that comes along with TTG. You also get a 30-minute one-on-one mentor phone call with myself and a $50 Best Buy gift card. So again, guys, that's coupon code TTG2020. It expires December 20th. That's what we got running right now. But guys, this is something that has never happened to me before. All right. It's never happened before. And it's almost like, I don't know if it's bittersweet or if it's ironic or whatever you want to call it, that the same week that the Trader Psychology course goes live is the first time that I get caught on the wrong side of news in the same week. That has never happened to me before in my entire trading career. And it was a major mental hurdle that I had to overcome this morning to work my way back to come green, because I was on the wrong side of a news trade headline today. Let's get into the first trade of the day, and that's the SPY. We got tremendous news out of this in the overall markets today, guys. The U.S. and China have agreed to terms of the phase 1 deal, and the market exploded to all-time highs. First, it started with a tweet from President Trump that we're very close to a deal, and then the explosion continued when they said that the U.S. was actually going to delay tariffs on the 15th, and then that the U.S. was going to reduce existing tariffs by 50%. The move continued. Later in the afternoon, and then we had a little pullback. And then later in the afternoon, we got news that the U.S. and China have now come to terms on a phase 1 deal. And then we moved higher again, and now we're trading back up at all-time highs as the markets closed. But starting the day, I came into the day looking to actually buy some put options in the SPY. The reason why I was looking to buy put options in the SPY was because of this resistance level you see here at 314.50. Let me go to a 15-minute chart. It becomes a little bit more clear. Here you guys can see on the 15-minute chart. You guys just see this resistance level here. Here we are here. We got more resistance here. And then you see more over here. So I'm thinking to myself, the deadline is December 15th for tariffs. So right off the bell, we were gapping up right underneath this 314.50 area. So I'm thinking to myself, if we can't get above 314.50, I'm going to buy some put options and look for a quick pullback down to 313.50 would be a real nice support level, which is the support level that you guys can see from right here. Okay, so I was looking for a quick little pullback away from 13.50 down to, away from 314.50 down to 313.50. So right off the bell, these first 2 red candles, we could not get through 314.50 right off the opening bell. So right off the bell, the SPY pushes up, gets rejected. We push up again, get rejected. Right here inside this candle, I went ahead and I bought SPY put options. I'll take you guys to my chart announcements. This is incredible. I bought the SPY 314 tomorrow's expiration put option at $1.08. Within 10 seconds, Guys, I'm not kidding. Within 10 seconds, Donald Trump sends out a tweet that says we are very close to a deal with China. They want a deal badly. So do we. And the market did that. 10 seconds after I entered the position. Now, this is the first time this has ever happened to me in my trading career. Not just being on the wrong side of news, but being on the wrong side of news twice in the same week. If you follow my channel, you know that I was in a swing trade in Peloton. I got long Peloton, and 3 minutes after I entered that position, Citron Research puts out a tweet with a $5 price target and a piece just slamming Peloton, saying that the company's only worth $5 a share. That scared the market and caused a sell-off and stopped me out of my position. Okay, I just made a video about that just the other day. So if you follow my channel, you know about it. So now let's put this into perspective. I entered a trade a few days ago. 3 minutes later, the news comes out and the stock sells off. 3 minutes later. Today, I enter a put option trade, and 10 seconds later, a tweet comes out by President Trump, and the market explodes. That has never happened to me before. My luck can't be any worse this week. I've never had anything like this happen to me, guys, honestly. So as soon as this happened, we explode, and I just cut my loss right there. Thank God I did, because we went so much higher. I exited the position at 71 cents. Okay, right when we popped through here, I exited at 71 cents. And at this point, this is now where the lessons come into play. I'm going to start this video off. Our first lesson is mental. Because once this happened, I was so angry, I can't even begin to describe to you guys the feelings that were going through. My blood was boiling. I'm like, there's no way that twice in the same week I am caught on the wrong side of news that quickly. First it was 3 minutes, now it was 10 seconds. I'm like, how is this even mathematically possible? I was furious. I had to get up from my desk, and I walked away. That is mental lesson number one. If you are ever in a situation, it doesn't have to be this specific situation, but where you are so angry, your blood is boiling, you're absolutely furious, you cannot revenge trade. You cannot revenge trade. This is one of the lessons that we go over in the Trader Psychology course that helps you keep your emotions under control and help you remain self-disciplined and help you think a certain way, and little tricks and tips to help kind of manage all of the emotions that come along with trading. That's what the Trader Psychology course is all about. So today, I had to get up from my desk, take my own advice, and that's why I'm saying it's kind of ironic that I just released the course this week, and now I've got this craziness to deal with, these mental hurdles that have just been a complete mind screw for me all week. I had to get up from my desk. I walked away. I got myself a glass of water. I took a sip of some coffee. I played with my dog a little bit, and I just walked around my house. I literally just did like a lap. I just walked around my house, cleared my head, came back, sat down, and I had to say to myself, you know what? This isn't that bad. The luck part is terrible. The P&L situation wasn't that bad. I only had 50 contracts. So the P&L situation wasn't that bad. I'm saying to myself, the market just opened. It's a long day. And I'm thinking to myself, if this news is real, if we're really that close to a deal and the market just made new all-time highs, there might be some other opportunities today. And if I just make one good trade, I'll be back green. And that's what I had to say to myself. And I was able to sit down, have a short memory, and get focused. And that's the important thing. Honestly, if you take anything away from this video, and I'm going to cover a lot more lessons as we go on. I'm telling you guys, it's a great video. You're going to want to stick around. Because there's a really good technical lessons I'm going to cover with you in just a bit. 2 about getting long and 1 about getting short. So this is going to be a good video. But again, guys, the lesson I really want you to take from this is what I was able to go through today mentally. With this lesson and another lesson I'm going to talk about mental also, to overcome these mental hurdles, excuse me, and bring myself back green on the day. It is so important that when you feel this way, when you feel the way that I did this morning, you don't revenge trade. You get up, you walk away, you clear your head, you come back, and you do not come back until your mind is clear. You have to have a short memory when it comes to trading. You cannot let a losing trade paralyze you. You cannot let a losing trade paralyze you. You have to have a short memory as a trader. If you make a loss, or if you take a loss, yes, you have to learn from it, but you have to move on from it. You can't pull a losing trade into your next trade with you. Every single trade has to be treated completely differently. All right. This is so important in your development as a trader and in your ability to be self-disciplined and manage your emotions. Okay. So important, guys. So that's what I did. I came back, I sat down, and I got focused. And I said, it's a long trading day. I was talking to everybody in chat. I was talking to the whole group, let them know. And I told everybody, as soon as everything happened, I told everybody in chat, I go, guys, I'm about to break something. I got to get up and take a walk. I'll be back in a few. And then I came back, sat down, and said, okay, guys, I feel better. My mind's clear. Now let's get down to business because it's a long day. And that's the truth. There's always going to be more opportunity. Don't ever forget that. So now let's continue. All right. And look, you can see how high the market went. I mean, thank God I exited when I did. My goodness. All right. But I came back, I sat down at my desk, and then I start to notice AMRX. Now, AMRX was already on the watch list today. AMRX was on the watch list because we were gapping up. I was looking for 425 to hold support. That's like 420, actually. It's this area you guys see right here. Okay, it's like 415-ish. So here's this previous high in early September, and here's these highs from early December. So this is the area that I was looking for to hold support. Oh, I just deleted that line accidentally. So there's that line. So let's go back to the 3-minute chart intraday. You can see we ended up holding a little above this level, actually. As you can see, we held above this level. But what came into play here? The trade line. Trade line comes into play and pushes this thing right through the high of the day. Let me move my face over here for a second because I want to show you the volume. So here you can see the trade line pushes us right up through VWAP. And when we got that push, we got a nice little increase in volume. We went right up and tested the initial morning high, which is the high of the day. There's the initial morning high. We went right up and tested it. Now at this point, VWAP was previously showing us that it was resistance. See how it was resistance, then we break through it, increase in volume, trade line. Now I'm saying I'm going to get long in front of VWAP, look for a trade line VWAP crossover, and look for new highs. I was bidding right there 20,000 shares at $4.60. The low of this candle is $4.62. This is where the next lesson comes into play. There's a technical lesson and a mental lesson at work here. Guys, I'm telling you, this video is awesome. So stick with me. Stay with me to the end of this. I guarantee you guys are not going to regret the few minutes of time that we're going to spend because this is some really, really good stuff. Let's first talk about my 20,000 share order at 460. The reason why I'm trying to get 20,000 shares. I'm sizing up on that position. That would be me getting a big position size for this stock. All right. So now I'm really trying to size up at 460. Why? Because my stop loss is 450. So previously resistance was VWAP. We just busted through it. As we pull back, VWAP is sitting at 455. Give it a little extra wiggle room. The trade line is sitting at 450. So I'm saying I'm going to give myself to 450. So that means I'm risking 10 cents. My comfort level, guys, on my trades, I'm looking for usually a $2,000 to $3,000 risk per trade is usually kind of where I usually set my position size. So if I'm only risking 10 cents, I can size up to 20,000 shares and still only be risking 2,000 to maybe 2,400 bucks on the trade. Now AMRX was very thick. AMRX is not like your recent low float, small cap runner that's going to continuously halt with a big spread, super volatile. That was not AMRX. AMRX was very, very thick. All right. The stock was not moving around like the stocks that halt. This is a much, much thicker stock. So I'm able to size up in the position because as long as there's enough liquidity to warrant my position size where I can get in and out without problems, then I'm going to size up. When you get the opportunity to get into a position really close to your stop loss, take advantage of that opportunity to size up as long as the liquidity warrants it. And now, guys, size is relative. If if sizing up to you means getting $500 or if sizing up to you means getting $100,000, whatever the dollar amount is, irrelevant. The strategy and the rules and everything that I'm explaining to you right now remains constant. And that is, if you're able to get an entry that is really close to your stop loss, as long as there's enough liquidity where you can get in and out of that position size with ease, size up. Because what's going to happen is, if you're wrong, you're going to exit the position, but you're going to exit the position and take a loss on a dollar amount that you're comfortable losing. So I'm sizing up there 20,000 shares. If I'm wrong and I lose, let's say 11 cents, I'm losing $2,200. Well, my average loss my average risk per trade is between $2,000 and $3,000. So that's right in line with a dollar amount that I'm comfortable risking on a trade. But if I'm right and I make 50, 60 cents on those 20,000 shares, well, now you're talking $10,000, $12,000. Now your average win has just increased greatly. That's bigger than well bigger than my average win. Okay, that's bigger than my average win. But that's how you can take advantage of these opportunities and size up at moments like that. So when you find yourself in opportunities like that, size up, because when you're wrong, it'll still be a dollar amount that you're okay risking because you're super close to your stop loss. But if you're right, now you're going to get a much bigger than average win. So take advantage of that opportunity to size up. Now, as you now know, I did not get filled at 460. The low of this candle is 462. And then we pushed right through the high of the day. This is mental lesson number 2. Now I need to deal with the frustration of missing my entry by 2 cents and watching the stock run higher without me. Again, another frustrating moment for me where my emotions started to come into play and I was aggravated. But one of the mental lessons that are covered in the Trader Psychology course, part 1, is you guys hear me, if you've been following my channel for a while, you hear me say this a lot. If a stock is truly strong, you will get more than one crack at it. I say it all the time. And I had to say that to myself again in AMRX, because when AMRX broke through the initial morning high, we were coming up to a gap entry point just over $5. Back to the daily chart, there's the gap entry point. The high of the day here on this gap down is 508. Your gap entry is 508. So now I'm thinking to myself, if this thing holds up here, we can push up into that gap. And that's what I was looking for. And what we had start to set up here was a nice little TTG triangle. Okay, there's my little TTG triangle setup. We held the initial morning high. We pulled back in. We held support at the previous high. We held support at the previous high. We held support at the previous high. And I entered on this red candle at $4.77. Take it back to my chart announcements. Here you guys see long at 477. Okay, long at 477. Bang, we get a break up and out of the downtrend line, and we push up and extend to new highs, and I start peeling profits off the table as we extend to new highs. Take you guys back. Here you can see I took 25% of the position off at 499. I took half the position off at 507, and now this brought me back green on the day. Now I'm back green on the day, and now at this point, I probably should have held on to this my last piece longer than I did. I exited the last piece. I exited my last piece in here. We ended up going higher. I should have held on to it, but at this point, guys, my emotions were running so wild because of what happened to me earlier in the morning with the SPY, with the Trump tweet, and then what happened to me with missing my fill by 2 cents, and then being able to come back, enter the trade, catch the move, go back green. My emotions, it was an emotional roller coaster for me today. It was an emotional roller coaster for me for the whole week. And I just said, I'm exiting the trade. I'm green on the day, and I'm shutting it down. And I'm going to come back tomorrow fresh, clear-headed, and starting over. Because my emotions were running wild. And when you feel your emotions running wild, it's important that you take a step back, because when you trade with emotions, you make mistakes. When you make mistakes, you lose money. And again, guys, this is why, like, all of these little things that I share with you on this channel, especially the mental stuff, I know you guys really appreciate the technical stuff. I mean, there's really good stuff in here about technical analysis. I'm always giving you guys technical analysis tips and lessons, but it's the mental stuff that makes the difference. Honestly, I always say 80% of trading is mental. It is the mental stuff that makes the difference. All right. So I spend a lot of time on this trader psychology course. I mean, obviously, if you're not a member, then you won't see it. But I know there's a lot of members that are on the YouTube channel. I hope you guys are enjoying the trader psychology course. If you're not a member yet and you want to be one, right now you can get 30% off the entire. It's a 1-year all-inclusive membership, guys. You get the beginner courses, the advanced courses, the options courses, and now the trader psychology course, as well as all future courses coming down the road, which include trader psychology part 2 and swing trading. So that's coming out in the future. Your membership, your all-inclusive membership, includes all future courses. I'm going to be coming out with a bunch of new stuff next year also. So if you guys are interested in that, it's 30% off, and you get a free one-on-one mentor phone call with me that expires December 20th. You can use coupon code TTG2020 at checkout on TrueTradingGroup.com. You can also click the link in the description below. All right. So we still have more lessons to cover, so stay with me. Next lesson is going to be a technical one. The technical lesson here on AMRX, guys, you see how AMRX now started to base. We're basing now. And I always say when you're looking for stocks that are setting up for afternoon moves, you want to look for stocks that are strong in the morning and hold above key support levels all throughout lunch. Those are the ones you look for to see if you get an afternoon move. But the other thing that I always say is that I do not trust lunchtime breakouts. Lunchtime breakouts tend to fail more often than to give you continuation because volume is typically lighter. And in order for a stock to give you follow through, it typically needs strong, steady, increasing volume to give you follow through. During lunch, volume is typically lighter. So when a stock breaks through the high of the day, like AMRX did at 130, and then fails, and you get a small increase in volume, you usually want to see if a stock's going to break a high of the day during lunch, you want to see the heaviest volume it's traded all day on that break, or close to the heaviest volume it's traded on that day. And you can see this volume bar is nowhere near the heaviest volume of the day. So when we failed to break the high there, well, we printed new highs, but we failed to break it and immediately pulled back in. For all of you traders that are watching this video that like to short small caps, this is an extremely high percentage setup to the short side. When you have a small cap that has pushed, it's been strong in the morning, it bases, then it tries to break the high of the day during lunch. Lunch is from 12 to 2 Eastern, and fails. If it fails on that high of day break, that is when you get short and your stop loss becomes the new high. So in this situation, here's your failed new high, right? And then you see the big pullback. Here's where you get short, and there's your stop loss, the new actual high. And the chances of you getting a follow-through pullback is very, very high. It's a very high percentage setup to the short side for those of you that like to short the small caps. All right. Next, that's another technical lesson. Okay. Next technical lesson. Look at where we found support. Right at the initial morning high. Always, 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 always be aware where the initial morning high is. I usually recommend once an initial high is put in place, draw a line across it and leave it there for the rest of the trading day so you constantly are in reminder and you're constantly aware of where that initial morning high sits. So often the initial morning high plays a major factor in the price action of the stock for the remainder of the day. You should always know where it is. If you were one of those traders that gets short and you got short here, you would absolutely be taking profits off at this level. We also had the moderators in TTG, Alex, who's one of the TTG moderators, he got long right there. He got long in front of this initial morning high and was taking profits up here into 512, 515. And that was a nice little trade. So always be aware of where that initial morning high sits. Always. All right, guys? That concludes all the lessons on this video. We've got mental lessons. We've got technical lessons. We got a TTG triangle. We've got the breakthrough VWAP. We've got the failed lunchtime breakout as a short setup. We've got initial morning high as a long entry. I mean, we've got so many technical lessons, and then we've got the mental lessons from earlier in the morning with my first trade, and then my second trade attempt when I didn't get the fill. There's so much to take away from the trading day today that let me move myself back over here now. It was weird having me over there on the left. There's so much to take away from this trading day, and I really hope that you guys enjoyed the video and are looking forward to the Trader Psychology course. Again, I'm keep reminding you guys, it's available until December 20th. 30% off a 1-year all-inclusive membership plan that gives you access to everything we have to offer: beginner courses, advanced courses, options courses, Trader Psychology course part 1, as well as all future courses coming down the road, which include Trader Psychology course part 2 and swing trading. All right, those are courses that are coming out in a couple weeks. But your membership with the 30% off gives you access to all future courses, as well as a free 30-minute one-on-one with myself. All right, so take advantage of it, guys. TTG 2020 is the discount code to type in at the checkout page at truetradinggroup.com to get that 30% off. I hope you guys enjoyed the video. Like I said, make sure to like, comment. If these are mental lessons that you guys struggle with, comment below. Let me know what you think. If you're one of those traders that short small caps, let me know what you think about that failed breakout as a setup. Let me know if you traded already. If not, I suggest you guys look for it. And make sure to subscribe and hit that notification button. I'll see you guys in chat tomorrow. We'll look to finish the week off strong. Take care, everybody.